We have a new dividend play for our Data Cat Divvy Pack, and I'm excited to share it with you guys today. It's going to be called Essential Utilities Incorporated, ticker symbol WTRG. Make sure you watch this full video today because this one's going to be an absolute banger. What's up, everybody? Art Turner, Data Productions Media. Dreams are tangible aspirations where we scheme our dreams into existence. Like I said in the intro, this one's going to be a banger. It's going to be more of a long form one. We're going to be adding a new dividend company within our dividend portfolio. So I'm going to break down everything for you today. We're going to go through the financials, the fundamentals, the growth aspects, and what type of news and events that are popping up, right? And so please follow with me today as we go through it all. So Essential Utilities Inc., WTRG. Please, if you haven't already watched my other videos talking about zodiacal astrology, Saturn and Aries, Saturn in Aries, and then Neptune in Aries, because it tells you why I'm choosing this stock. In the themes that I'm going off of with this. So Essential Utilities Inc., WTRG, is a waters utility company. And it's headquartered in Bryn Mawr, Pennsylvania. The CEO is Christopher H. Franklin, founded in 1968. The dividend yield is 3.4%, which we'll talk about later on, and it's important. And so AWK, American Water Works Company, is another utility company that's actually buying Essential Utilities, and it's supposed to go in effect in 2027. And AWK, American Water Works, has been around since 1886. It's also a Pennsylvania company, so it's just right down the street, right? It's very old. And so there was a merger announced, and we'll just talk about the merger a little bit. What's actually happened: AWK agreed to merge with WTRG in an all-stock deal. Shareholders of WTRG will receive 0.305 of AWK per WTRG share upon closing. The merger has been approved by both company shareholders and expected to close early 2027, subject to regulatory approvals. Because of this deal is stock for stock, there isn't a fixed cash price. Instead, WTRG's value at closing depends on AWK's share price at that time. What this means for WTRG stock price: the target share price normally jumps above its pre-announcement level to reflect premium the acquirer is paying. The target stock usually trades below the theoretical merger exchange value because there's uncertainty about timing, whether the deal will actually close. In this case, market's implied value based on the exchange ratio of AWK's price suggests more value for WTRG shares than where WTR shares trades today. For example, some deal metrics imply a theoretical $43 share price for WTRG if AWK stays within a certain range, higher than the current 39 price when I got in. And so I did get my first couple shares around $39, just under $39. As you see, the current price as of March 31st, as of today, Essential Utilities is trading $40.20. American Water Works is $136.01. That's actually during the actual trading day that's happening right now. And in regards to some gematria, we have Essential Utilities Inc. and Neptune and Saturn and Aries, both equaling 92 in reduction. That's important. Essential Utilities Inc., Neptune and Saturn and Aries, 92 reduction. That's a big tall tail sign right there. Essential Utilities Inc., WTRG 2027. We have 333 English ordinal. Then we have 126 in reduction. AWK stock to buy WTRG stock 2027. 333 English ordinal. That's another powerful decode. Then we have Essential Utilities Inc., NYSE, WTRG, 133 reduction, which is a big investment number. Buy Utilities Inc., WTRG, 2026, 137 English reduction. You know, that's the 33rd prime. Powerful number right there. And then Buy Utilities, Buy Essential Utilities Inc., WTRG stock in 2026 for large profit near the end of the decade equals 333 in English reduction. So let me read that again because that's a very powerful decode. Buy Essential Utilities WTRG stock in 2026 for large profit near the end of the decade, 2030, which is smack dab in the middle of Neptune in Aries, 333 in English reduction. So you see where we're at. That's why I like the stock. It's fallen in line with the astrological zodiacal investing I'm honing in on. It follows the themes that are happening around the world right now. This is more of a stable company, but I think there is some premium value that we can get even for a dividend company. You know, it's not necessarily a super growth cap, but this is supposed to, you know, grow our wealth, grow our money in a little bit of a more safe way. And so let's talk about WTRG fundamentals. I mean, honestly, like their fundamentals are pretty good overall. That's why AWK is looking to add them. To me, they're undervalued right now a little bit. You know, they have a lot of cash on hand. You know, they have a positive equity overall. You know, revenues in the billions. They have net income. And so when I look at companies like this, especially utilities companies for practical valuations, yes, long-term debt should be a part of the valuation, but sometimes long-term debt is usually like lease buildings and it's stuff that you just pay slowly over time. It's not really affecting the business on a short-term time basis. So you can look at some different fair values differently, right? And so if you use the pure total equity, the total book value, just purely off assets and liabilities and having a positive total equity, you know, the price would come out to be about $24.24. That's just pure off price to book. But again, you know, these type of companies, utility companies, they do have a lot of leverage. They do have a lot of debt just because of their size and their operation, but they're very stable and they typically pay it off over time, slowly over time. And so looking at it, say if I just take out the a lot of the long-term debts, right? If I take off the long-term debts, so now their total equity is 14.85 billion divided by their shares outstanding, which is 283 million. We're getting a price of $53.47. And so then that's when you're now seeing the price is straddling within those two bands, right? It's straddling the WTRG price is at $40 right now. So think about it. It's straddling the $24 of book value, you know, because you know long-term debt's not a total big issue. It's serviceable. It's often recoverable through rates. It's expected and it's structured, right? But you also have the high side where you still have to account for it. But, you know, in this case, maybe you don't. You just want to see the high range of what's possible. And so that's that 52. So it's kind of like, you know, that's how you think about it, right? And so it's straddling the price. I think it's a little, well, I think it's fairly valued in a sense, but it's undervalued when you think about the merger that's coming. And that's the next slide we'll be talking about. So there is an arbitrage spread opportunity in WTRG. WTRG is undervalued to AWK and buyout when including spread and the dividend. So you have to include the spread and the dividend. So let me look at okay. Total return components if you buy WTRG, the merger spread, At that time when I was buying, it was about a 4% upside to the deal closes because I was getting a good deal at that moment. The dividend advantage, extra 1% per year versus AWK while you wait. If closing takes 2 years, is extra 2% extra income because AWK's dividend is 2.4 and 2.4, and then W2RG's is 3.4, a roundabout. Both are slow growth regulated utilities, so that's why I'm going W2RG just with that little extra pop. And rough expected return, if the spread's about 4%, the dividend is 2% over 2 years, deal closes as expected, that's roughly a 6% extra return versus owning American Waterworks outright. That's the gamble. I'm trying to get that extra 6% on top of what I think the company's going to do long term. That's meaningful for a conservative utility investment. The bottom line is, including dividends, WTRG becomes more attractive than the spread alone suggests. It's no longer just a 4% arbitrage idea. It becomes moderate income, defensive utility investment with potential merger bonus. And when you think about, I guess, the themes that are happening in the world, there could be some uncertainty to the upside for us, right? If water becomes even more scarce, it might push up the price even more, and this company is more important. And so when you add in the spread, that's when you get that extra. And right now, as of the day of open, when American Waterworks was at 138.82 and then Essential Utilities at 41, they both dropped in price today as of today. But as of open, the implied value of the merger would have been $42.34. So anything under $42.34 for today would have been a good buy of WTRG over AWK. So there's a $1.29 spread. So there's about a 3% discount. So that's a moderate spread combined with 3.4 dividend, total carry, interesting rate. So now you're getting into some good stuff. So that's what I'm seeing with WTRG. Right now, as you see, I have 5 shares. I have $200 invested, and over time, I'm gonna keep looking at the spread and trying to add. Obviously, at some point, I gotta look at AWK, in which I have. Like, they do have good operations, and I think this will be an accretive merger for both parties, and it just shores up a lot more of the pipelines. WTRG is in natural gas, which natural gas is going to be playing a role as well, which might give them even a more premium, because I do like the natural gas opportunities out there. And so I like it a lot. You have, when we go to gematria, you have 6% spread equals 333 English reduction. A 6% spread means buy WTRG over AWK, 333 English ordinal. That's powerful. Buying WTRG is smart for AWK buyout in 2027 because of price spread and WTRG's 3% dividend. That equals 333 in English reduction. So you see, that is very powerful. Again, I want to say buying WTRG is smart for AWK buyout in 2027 because of price spread and WTRG's 3% dividend, which equals 333 English reduction. So please, we'll continue to monitor this. I am invested in this, and I'm just going to slow play it. I think when you think about like a utility company, you're not looking for huge gains. And for my portfolio, I have to have different styles of dividend investment. So this one's a nice, safe one. I'm trying to squeeze out as much percentage points as possible, but also understanding I'm going to get growth over time. I think water is going to be a growth factor for these type of companies moving forward. So let me know what you think about this stock idea in the comments below. Please like this video, subscribe to the channel, and watch all my other video content in regards to the investing world. My results speak for themselves. You might think I'm crazy, but the results speak for themselves. But with that being said, Art Turner, Data Productions Media, dreams are tangible aspirations where we scheme our dreams into existence. I love you all. I'll see you in the next video.